Have you ever looked at your bank account, then looked at the news about the economy and thought, wait a second, these two things don't add up? Well, you are definitely not alone. Right now, there's this huge disconnect in the U.S. economy. And according to Brian Moynihan, the CEO of Bank of America, the hard data tells a very, very different story than what a lot of us are feeling day to day. So let's dig into what he's saying.
Okay, so this is the central puzzle right here. On one side, you have what we feel. And for a lot of people, that feeling is that they're falling behind, that their paycheck just doesn't go as far as it used to. But then, when Bank of America looks at the actual transaction data, what people are really buying, they see consumer spending is still climbing. So what gives?
So to figure this out, we're going to break down Moynihan's analysis into 5 key parts. We'll start with that gap between feelings and financials. Then we'll get into the whole K-shaped economy question, see what's on the minds of small business owners, tackle the housing market, and finally wrap up with the super important role of the Federal Reserve. All right, first up, let's really unpack this gap between what we're telling pollsters about the economy and what our bank accounts are actually showing. So check this out. According to the data from millions and millions of transactions, spending at the end of last year was up about 4.5% from the year before. Now, that is not a sign of an economy that's shrinking. That's real, solid growth. And just to be super clear, that's even after you account for inflation. And Moynihan says this strength is resting on 3 pretty sturdy pillars. First, wages are growing. Second, unemployment is still at a historically low level, which means people have jobs. And third, and this is a big one, people's credit quality is good. In simple terms, that means we're paying our bills on time. And this really gets to the heart of it. The feelings of anxiety, especially after that sharp spike in inflation we all lived through, are absolutely real and valid. No one's denying that. But those feelings just don't seem to be showing up in our collective spending habits, which have stayed surprisingly strong. So if spending is up, does that mean everyone is doing great? Well, that leads us right into this really popular idea you hear about a lot these days, the K-shaped economy. Now, if you're not familiar with the term, just picture the letter K. The idea is that the top arm is shooting up, meaning higher income folks are doing fantastic, while the bottom arm of the K is trending down, with lower income families getting left behind. The big question is, does the data actually show that? Okay, now this is where things get really, really interesting. Looking at Bank of America's data, yeah, you can see that higher income households are increasing their spending at a faster rate. But look closer. The really crucial detail here is that spending is also growing for the middle and the lower thirds. Everybody's line is going up. And this is the key point Moynihan wants to make. It's not a situation where one group is sinking while another one is soaring. Instead, the data suggests it's more like everyone is moving forward, just at different speeds. It's a story of different momentums, not a story of 2 completely opposite economies. Though, it does raise some questions about what happens if those different speeds continue over the long run. But hey, the economy isn't just about us as consumers, right? So let's shift gears and look at the engine of job creation in this country, small businesses. What's the biggest thing keeping them up at night? If we were having this conversation just a little while ago, the number one answer would have been uncertainty. Specifically, a lot of business owners were worried about trade tariffs and what that meant for the price of their supplies. It was just really hard for them to plan.
But that has totally changed. Now, the single biggest issue they're facing is finding enough people to actually do the work. The problem has shifted from the cost of stuff to the availability of people.
And look, for these entrepreneurs, it's not about politics. It's all about predictability. They just need to know the rules of the game, especially around things like immigration, so they can find the workers they need and actually run their business. All they want is a stable foundation to build on. All right. Next up, let's talk about one of the biggest reasons for that feeling of unaffordability, the housing market. So the housing market is basically stuck between a rock and a hard place. On one side, you have higher interest rates. I mean, if you're lucky enough to have a 3% mortgage right now, you are not moving. No way. That freezes up the market. Then, on the other side, we have this massive, years-long shortage of actual houses, which keeps prices sky high. Now, here is where Moynihan has a really counterintuitive take. A lot of us might be dreaming about those super low mortgage rates coming back, but he argues that's the last thing we should be hoping for. And this really explains his thinking. Those rock-bottom interest rates, they're usually a sign of a weak economy. It's like medicine you give a sick patient to fight off a recession.
A truly healthy, growing economy should be strong enough to handle more normal interest rates. That 3% world we saw was an anomaly, not a healthy target.
And all this talk about interest rates brings us to our final and maybe most important topic, the Federal Reserve, the institution that's actually in charge of setting those rates.
So, do we pay too much attention to the Fed? Moynihan thinks so. He argues that we hang on every single word, every little hint about a rate change, when the real economy is actually driven by the millions of decisions made by entrepreneurs and consumers every single day. But, and this is a huge but, while we might overfocus on the small stuff, Moynihan gives this really stark warning about the one thing that is absolutely non-negotiable: the Fed's independence from politics. This is the ultimate foundation. The whole global financial system has confidence in the U.S. because they believe the Fed will make decisions based on economic data, not what's politically convenient. He warns that if you lose that trust, the market will punish everyone through instability and higher borrowing costs. And all of this leaves us with one final, really big question. In a world where the hard data says one thing, but our gut feeling says another, how do we figure out what the true state of the economy really is? It's a puzzle that goes way beyond spreadsheets and gets to the very heart of how we see the world.